All right, guys, what's going on? Good evening, everybody. Happy New Year, 2024. Glad to be with you. My name is Carlos Garcia, founder and CEO of Guard Capital. Glad to be with you. You are here for the top 10 stocks of 2024. So let's go ahead and go over them, what I like about them, just like we did in 2023. Talked about the different themes and how that kind of went together with how we did in those picks in 2023. So before we begin, let's go ahead and take a look at 2023 rather quickly. We did a 2023 top 10 stocks revisited. I think that was in July. If you're interested in that video, make sure to take a look at our YouTube channel. If you haven't subscribed already, got some really great stuff coming. So make sure to hit that subscribe button. Hit the notifications bell so you don't miss anything as well. Like and comment your questions. Appreciate it as always. Here are the names of last year. Top 10 stocks 2023. Tesla, big winner. Semiconductors, we talked about how important semiconductors were to the new global economy. If you don't want to buy SMH, you could just buy NVIDIA. NVIDIA is the biggest part of that. If you bought SMH or NVIDIA or AMD, congratulations. They did absolutely amazing. Microsoft, ChatGPT, of course, just a well-run company all around, did well. Boeing, industrials. I like Caterpillar too, but Boeing did well. Caterpillar hit an all-time high in 2023. And then industrial, again, value stocks space. But I don't think Boeing was in that value space anyways. Gold, we talked about how the dollar would slide and how that would benefit commodities like gold. Gold went up into a new all-time high as well. Small caps didn't do as well as its other index brethren, like the NASDAQ, the Dow, and the S&P, obviously. But IWM did manage to do double-digit returns, nearly 20% from the lows of 2022. And even with the banking crisis of SVB, IWM did a respectable 19%. Emerging markets, really the only hit there was really the fact that the dollar was strong in the middle of the year. But again, emerging markets, I still like moving forward as the dollar continues to fall. That's what we expect. Asian markets, maybe China will do a little better next year. That's what we're looking for as the China names have been beaten down. Equal weight S&P, again, this is all the 500 stocks in an ETF, all weighed equally. No skew of NASDAQ heavy mega cap names. 14%. FCX copper, again, that was still part of the falling dollar theme that we talked about, higher commodity prices. Construction spending picking up, as we know, kind of more in a way that's going to skew to industrials. Why not play copper? Again, FCX gained 15%. And bonds actually squeezed out green, not including dividends. So again, TLT, I do expect bond prices to continue to go higher as the Federal Reserve starts getting into a more accommodative position, meaning that it looks like they're going to cut rates starting in March. But again, we'll look at this down the line in 2024 and see if I was right or wrong. So there's your update of 2023 and why we talked about it. So let's go ahead and unveil the top 10 stocks of 2024. And here it is. We went ahead and sent this over to our server, our Discord server. If you have not joined our Discord server, make sure that you do, at least for the market blog. It is free. Description, all the information in the description box below. Would love to have you on board. The goal is to have as many of you guys that are YouTube followers, subscribers as well. I think we're at 8,500, 8,600 to join the blog. If you like these videos, then you would love our Discord server. So let's go ahead and go top to bottom rather quickly. Again, I'm just going to name the ticker and I'm going to name the name of the company. And we're going to chart each of them and I'm going to explain why I like them. And we'll just go from there. Top 10. Microsoft being number one. Microsoft, this is not in particular order, by the way. So again, depends if there's any names that you like here, cool. Maybe that kind of reflects on the fact that you feel better, like, oh yeah, see, Carlos agrees with me, it's a great stock. Or, you could split them all into 10 equal parts if you want. It's really up to you. Most of these I do already own. I'm not gonna go out and buy them. Again, I just like these names, and the only way we can really track it is where they were in January 2nd to where they are at the end of the year. And that's kind of the only way we can verify it. So when it says the word entry, it's not a signal, mind you. It's just a reference point of where we were starting January 2nd. So just want to give that. This isn't a signal to everybody to run out and buy. These are the stocks that we like in 2023. Everyone's investment strategy is different. This may be too conservative. This may be too high risk. Everyone is different. So again, always obviously go by your risk tolerance. never risk more than you can handle at the end of the day, and do your research too. And this is one place to get started with your research, right? Microsoft, one of the members last year of the top 10, one of my favorite companies, one of the best ran companies out there. Satya Nadella, shout out. So let's take a look at Microsoft, and I'm going to go and bring up the weekly to kind of give us a little bit of a view longer term. And you could see all-time highs were hit. Yes, we're pulling back a little bit. The Nasdaq was down today 1.63%, over 300 points on the future side. But as you could see, Nasdaq, at least on Microsoft on a technical basis, very, very nice looking cup and handle setup. I still expect that we have more room to go higher. Again, with the integration of AI is the kind of the big thing now, and Microsoft being cornering the market with the Chat GPT. I like Google as well in terms of the stock. I think Google is also well placed for a continuance to the upside. I just think Microsoft, with not having such a customer, how do I say this? Not to have so much consumer exposure. Google has Android, as we know, not a big part of their revenue base. Obviously not. YouTube still a big part. They're one of the big money makers and search engines. But if anything, Microsoft to me shows more expansion, not more contraction. So if we were looking at a time of high inflation in 2022, then I think Google would probably be a better pick just for the fact that they kind of have a moat around things like a YouTube and their search engine. But the search engine is also beholden to ads. Microsoft doesn't have that because they are a computer manufacturer and they also are a cloud provider, one of the largest, as we know, with Azure. There's still growth there. And ChatGPT is just going to be an additional revenue driver, in my belief, with ChatGPT to really accelerate Microsoft in a way that we haven't seen Microsoft boom really since the mega cap growth story, probably since 2016, 2015, when we started getting that leg higher. Think of the AMDs and the NVIDIAs of the world getting that leg higher. I wouldn't say this is more like a dot-com situation in a sense because I don't see Microsoft going parabolic either, especially on a 3-year weekly basis here. You could see just pretty much a cup and handle, but again, that is a bullish settlement there, sentiment there. And of course, it being the second largest part of the S&P obviously provides its challenges. It's commoditized, as we know. Futures contracts can affect Microsoft. Any kind of bad news in the market, Microsoft's going to get hit because it's so large part of the S&P 500. So, you're kind of beholden to that. But again, strong revenue driver, best credit rating amongst the major corporations other than J&J at a AAA rating. Let's go and bring up some of the Microsoft. And here we are. This is courtesy of FinViz Elite. Price to sales at 1263. That's on the higher end side. 28 times forward earnings. When you're getting a 5% yield, it's a tough sell at these levels. So again, this is why I talked about the actual chart showing the entry. Let's not use that as an entry at all. Let's look at that as where we were starting January 1. So again, it's very rich valuation at 28 times. So that could either be extremely rich, really kind of front running how big something can be. Sounds like Meta when we had the metaverse and we were all kind of pricing that to go higher. Hey, I thought the metaverse would really kick in, but it just didn't work out in that environment. Fine, but metaverse is doing their thing now in kind of focusing on the social media, the WhatsApp, and more of the Oculus. But the metaverse as well, that hasn't really picked up steam the way AI has. So I think this is probably the better horse to pick in a sense. The only thing is that it is relatively expensive here, and the price earnings multiple 36. And again, you're not going to get that sales unless it's going to be AI and cloud centric. And looks like Microsoft kind of has both right now. EPS growth in the past 5 years is about 35%. Quarter over quarter EPS growth 27%. It could be just expensive. Their gross margin is at 69%, very strong. Profit margin of 35%. Props to Satya Nadella and Microsoft there. Again, this is really a story on AI and cloud. And again, I know there's a lot of people who like different cloud companies out there. I mean, there's tons to like. People like Snowflake, people like Salesforce.com, Oracle, Amazon. Again, Amazon's a great company, as we know. And I'm going to pivot to that. And you notice in the top 10 stocks here, Amazon and Microsoft are there. These are the top 2 cloud providers. But I also get the AI with Microsoft. That's a big deal. The operating systems on PCs, yes, we know. But I really believe that when it comes to ChatGPT, and I actually use it, I think that's really going to be that next step above just a Google search. ChatGPT being that assistant. Again, we have a little bit of consumer usage right now. ChatGPT kind of being the beginning, but, then there's different kind of tools out there, building websites and such, creating images. But I think we're just scratching the surface. So that's why I'm kind of putting a little more emphasis on Microsoft than anything else. But again, it is rather expensive. So again, I'm going to be fair. So what would be a kind of a decent level? And again, I fully expect this year we'll more likely get a correction. We get one almost every year. Around 18 months or 16 months or so, we get a 10% haircut off the peak. So what would that look like on a Microsoft? I think around 348 to 340, right around that 20-day moving average. It's the same level that we were back in October of 2021. And that's with the highs in November, 2021. We recouped that back in July, came back down. So again, one more retest to test that support, or which was previous resistance. I think that's a good level for those who want to take a stab or maybe add a little more to some Microsoft. So again, I'm going to place that alert there. But again, Microsoft, again, I can't fight what it is. I mean, it's a great company, and it's one of those names that it's pretty solid as it gets. It would be a stock that you would probably recommend to your grandmother. They're just what they are. They're just a solid company, part of the Dow. We know what they do and what they provide to the table. And yes, they pay a dividend. Nothing to be too excited about. But again, every little bit helps, right, guys? Palantir. Yes. Palantir is a name I've been talking about forever. Let's start with a chart. 2030 is what I'm looking for a break. We do have a gap to fill at 2402. That's about a 20% pop. Not bad. But what I'm looking for here is this weekly gap here around 3121. Now, it doesn't sound like much, but that's effectively doubling where we are now. So again, if we can get something around those lines, I think I'd be extremely happy with the name. You're talking about a level of 31 right here. Let me see if I can activate this drawing. There you go. And that's what we're looking for, right around 31.26. That'll be my price target. On Microsoft, price target at time highs, unless you're doing Fibonacci, it's an exercise in futility because there's no target that we 127 being my target for here. This is also being of the high beta, lower interest rates. High beta stocks are going to soar. China was one of the best stocks on the in 2023 and one for dead, right? Bankruptcy talks and everything, but the stock didn't. Why? Because interest rates were lowering, inflation's lowering, and the dollar is lowering. So again, this benefits names like Palantir, which are still high beta, still aggressive growth. Think of names back in 2000. They want shareholder money in terms of dividends or buybacks, but I'm looking for growth. I hear the key, and again, I love Palantir. It's a name that I have been talking about. And again, first gap fill right around 20 and on to 127. Let's take a look at info on them. Palantir is expensive at 56 forward PE and a PE of 256. Now, again, the difference between a Microsoft and their price to earnings multiple, how much growth are we expecting? But when it comes to Palantir, we're expecting high growth. So we're willing to do a little more for that return. EPS this year was up 310%. Sales are up. I would like that a little more, a little higher, but the gross margins at 80% is absolutely nice. Nice. Not to get a dividend, as we know, this is about growth. This is playing the lower interest rate environment, more expansionary, more risk-taking, a risk on time, if all goes well, obviously, in terms of expectations. Performance for the year, 159% last year in terms of Palantir. Great company, as we know. 22 needs to knock on the door so we can actually play some calls, if anything. Right around 20 is what I'm looking for. Again, we've been playing these options forever. But again, in terms of Palantir, you kind of want to look at it here in terms of that we've just been chopping around for a minute. I have an alert at 15 and around 13. I think that's a great level. If we get a little bit of weakness, maybe interest rates kind of spike a little bit in January after we had such a great run in December and November, completely natural, completely normal. I think that's a time to start shopping and buying the dip on a Palantir. We'll keep it moving. What else we got here? IWM, small cap, same as last year. And again, I fully expect rotation. Not the best candle here on the 25th, as we know. That was on the weekly candle. This looks like a reversal candle, and you can see how much we fell today. But again, fully expect us to get above 203.59 with interest rates falling, and then we're looking around 213 to around 220. With all goes well, and we get a rotation out of tech, which I expect in Q1. Again, these heavy cap, mega cap tech names, guys, are a little overbought, as we know. They got all the love last year. Now, again, I expect the rotation into banks. I expect the rotation into small caps. Those two and high betas as well. Now, high betas could be overbought as well. Think of Amera. But when it comes to the high betas, they are very cyclical. When things are going well, when inflation is lower, consumer confidence is going lower, the dollar is coming a little lower. That means exports are a little more expensive. The export stuff is going to be cheaper, but the imports are going to be a little more expensive for us. So again, if you're doing a little traveling overseas, maybe not the best time with the dollar being lower. But again, if you're trading stocks, this is a good thing, obviously. But I fully expect that the ratio of small caps to QQQ, which has skewed so much to the downside, meaning it was very heavy tech, I think it's time that small caps do catch a bid and again, kind of show that risk on future growth that we are expecting to see. And again, we're really just trying to get back to around 2022 levels in January. Just like we did on the S&P, just like we did on the NASDAQ, just like we did on most stocks out there. I mean, for the most part, if you bought stocks in 2021 December and you went in a coma and you woke up January 1 this year, you're pretty much at break even, depending on the name. High betas are not part of that. As we know, we had the big pump in 2021, and banks are not there yet, as we know. Energy is not there yet, as we know. But mega high cap tech, yeah, for the most part, the big names in terms of the S&P, those guys are back to where they were back in 2021, if not higher. So we keep it moving. Pfizer. Now, this one may be a little controversial, and I'm just looking at value. Now, again, everyone's different. Let's take a look at it. We just traded Pfizer today in terms of options. Got a couple of gaps to fill. Got one here at 38.27. So I'm looking for that to fill. And again, we could use the options market as well, like we did with Mara and Palantir last year. So we got a gap there. Let's see, no other daily gaps. Let's see if there's any weekly gaps. No. So really what we're looking for is we start carving out a bottom. That's what we're looking for. We're looking for value here. And let's see it on Pfizer. Pfizer is at its point. Basically, we're at its point right now. If we went back in time to March 2020, during the throes of COVID. Now, granted, how much of this is the vaccine? Sure. How much of this is the expectation of you're not going to get any more vaccine sales or whatever? Or what are the odds if we're going to get another pandemic? Fine. And again, we're not looking for 61.71, team. That's not what we're looking for. We're looking for to get back to April 2021 levels. That's really it. Get us back to 41. That's really all we're looking for. Again, this is more like a trade of anything. And again, if you want to own Pfizer, that's fine. Getting it at an extremely deeply discounted rate. And again, we're just looking for a stable company that provides some value. And that's really much it. So let's take a look at Pfizer together. And again, this is not some fly-by-night, biotech company. This is paying at a forward PE of $12.88, $12.88 forward price to earnings, guys. Yes, sales are down, granted, compared to 2022, compared to 2021, when everyone took the COVID vaccine. Granted, you have these pops, you have these drops, but again, this is not a high beta name. More times than not, these things bottom out over time. Names like Walmart bottom out over time. It just happens. But again, when you have a deviation due to something like a pandemic, and you have automatic sales because the government's buying your vaccines, well, the expectations moving forward are probably not going to be so great. The good news is that you do get a dividend of 5.56%, gross margin around 53%. The EPS for next year is expected at 50% growth for the next 5 years, not the best. So again, you could see sales 21, 22, great in comparison to 2018, 2019, 2020. Could this be a political thing where things may change with the new election? Sure. I mean, that's always the case, but that's in November. And I think right now with this downward trend, you can see on the daily, with this channel breaking out of it, I think there's some value there on Pfizer. Again, you don't have to own it long term. I'm just looking for something to make some money for y'all. That's really it. And that's what I think on Pfizer. And I think when everyone hates it, that's when we got to start looking at it, right? Amazon. Amazon, another name, one of the favorites that we've been talking about a while. One of the few names that are not near all-time highs that were tech-centric. Kind of put this in the bucket of who did COVID benefit? Amazon. And of course, when the costs went up, when warehouses and everything like that, Prime and all that jazz, all that spending, yeah, the stock slid. But now we're starting to move. We still got a gap to fill 163.06. I'm looking at possibly this green dotted line here. That's right near the 50% retrace. 135 level, if we can get some kind of correction in Q1. Again, mega caps are really, really heavy now. You saw the Nasdaq drop here with off one a downgrade from Apple, mind you. The gap to fill 163.06. I fully expect Amazon by the end of the year to get to the 180 to 188 levels. That's near all-time highs back from July 2020 or 2021, excuse me. So again, Amazon with cloud, with their obviously the online stores, investing in media. They have the NFL. People are watching the Thursday night football stuff. They're getting a lot of exposure. I mean, how much more exposure than you need? We see the Amazon trucks everywhere. But the key here on Amazon to me is really cloud and the integration with AI, obviously AWS. AWS is massively profitable if they were just spun off, which could happen possibly if we get, who knows when it comes to the government and any kind of antitrust lawsuits. Again, that's neither here nor there. I'm not sure. But again, you're talking about just cloud alone could be a standalone Fortune 500 company. And this is mixed in with one of the largest retailers on earth. They still have some kind of footprint to miss. They still got some Asian countries, South America, Africa, Latin America that they still need to put their footprint in, and they're just not there yet. So with Amazon, again, I like really the cloud story the most. The only issue is that if we get labor to decrease, that would actually help Amazon because they would probably be the leaders or kind of the leading indicator if people are not buying. And if they start doing some layoffs, especially in the delivery and warehouses, that would probably be the canary in the coal mine scenario where the labor market is really getting weaker and then we'll start getting some deflation. That's where we need to start seeing what are the opportunities out there and maybe adjust a couple of things when we're trading it. But as of right now, for as we speak, I fully expect a correction in this stock of at least 10% this year. And again, that happens every year. It's nothing special. Around 12 to around 18 months, we get a correction. That's completely natural, completely normal. This is overbought, as we know. Well, now we're at an RSI of 52, but still in the top end of the range. Again, I still think it's a buy the dip scenario on a great company like Amazon. But again, right around the 136 area is a really good level. We do have a gap to fill at 163.06. I'll be trading this with the team. Amazon is a great company to own regardless. Just doesn't pay a dividend, as we know, and it's still a growth company. So we'll see what we get on it. Moving on to TLT. This is bond yields. Again, not a stock, I know, but it is an ETF. And if we get the Fed to cut aggressively, we don't know that. This goes twofold. If you expect a recession to come, TLT is going to soar. If you expect the Fed to cut harder than we all expect, TLT is going to soar. Money's going to be cheaper. Bonds are going to be more in vogue here. So this is really a recession-resistant play plus a safety play plus rates going lower with an accommodative Fed play. You need to get above 108.34. That's our breakout level. If we can get above 108.34, really that's where TLT starts cooking. We're talking possible double digits just to make up for the horrific year in bonds in 2022. 2023 was a little bit rough, as we know in the beginning, but TLT came out positive. I still think TLT has a leg higher. We're just going to see how the Fed and how accommodative they are. How many bond auctions are going to be out there? How much supply of government bonds will be out there? That remains to be seen. Let's see how dovish the Fed goes. But TLT is also a good recession. If you fear a recession, maybe labor market starts to crack, TLT would be the place to go. That would be the flight to safety. JPM, I had some banks that I was looking at. For example, Goldman Sachs I was looking at. I was looking at Bank of America and Citi. But I still come back to good old Jamie Dimon and JPM. That's just the pick that I have. Listen, to me, this is the bank, the best bank in retail. It's one of the best banks in investment banking. Yes, they're going to get started on the Bitcoin ETF. I think JPM is a part of that. With Fidelity, I may be wrong. It's a breakout, yes, like Microsoft. And I do fully expect that the banks continue to run higher with lower rates, which allows people to refinance their homes which allows people to refinance whatever they got to refinance. Again, money's going to be a little easier. We're going to have more liquidity in the system as the Fed continues to cut. The expectation is in March. That's the market expectation. But with XLF being where it is at 37.76, and we know banks have more room to run, Citibank, Bank of America, Goldman Sachs, I'll look at that here in a second. You see a breakout here off the 78.6 fib line on the daily. Let's bring up the weekly to show. And you could see here that we still got room to 41.70. What do you think? JPM's not going to be a part of that? Of course it will. That we have a price target? No, because it's really at highs that we haven't seen. Can't be all-time highs, is it? Pretty close. October 2021 highs of 172.96. That's the highs that I have for JPM. That is all-time highs, yes. So very similar to the Microsoft. There's no real target here, but when it comes to banks, JPM still has the fortress balance sheet. They have their hands in pretty much everything: investment banking, retail banking, credit cards. They are a mega bank. It's just what it is. If we take a look at Bank of America as one of their peers, and we can see their price action. Oh, BAC. BAC is about to break out above 34.57, but again, we can get up maybe to 38.49. We got a lot of room to go to 50. If we go to Citibank, Citibank is breaking out pretty close to 55. That would confirm the breakout. Then we have a little more room to run. But I still think out of all these banks here, there is a reason why JPM stands above all, even though Goldman Sachs looks really good. Same thing with Morgan Stanley. Again, you could be picky and choosy, kind of the semiconductor situation. How's this? JPM is my NVIDIA when it comes to semiconductors. Yes, XLF, JPM is the biggest part of it. It's the same thing. I could have put XLF just the way I did SMH. If that's what you want to do, fine. I'm just going to say JPM because I fully expect XLF to hit near the 40s, if not 41, with rates lowering this year. Give me 1 second, team. Let me move this over. I don't know why I opened my email. Okay, so we have next XHB. You're probably thinking to yourself, what is XHB? This is the Home Builders ETF. The Home Builders ETF. And you can see moving higher as well. And the reason that home builders are going to go higher, again, like we talked about, lower rates. And we also have very low inventory in homes. So if we don't get people selling their homes that they currently have, for the simple fact that, hey, I'm sitting here with a sub 3% rent, I'm not selling anything. This is the vacuum that the XHB and the KB Homes and all these other home builders are going to take over. They're going to fill that void, okay, for XHB being the home builders. Again, lower rates. So again, refinancing would not help the home builders, as we know, but it can help the home builders provide incentives to get people in their homes, especially with rates coming lower moving forward. This ties into that lower inflation, lower dollar, lower interest rates still continuing as we're still getting the Fed to lower interest rates as we expect in March. Again, all that could change. It is only January 2nd. Let's go ahead and bring up some of the details on XHB. And the only reason I didn't bring up JPM is because it broke all-time highs. So XHB, you could see, provided by Finviz here, that we're starting to hit a little bit of resistance here. We do have a gap here at 91.18. Again, you can always wait for that gap to fill. There's another gap here at 77.85. That's obviously a downside risk, but again, this is the Home Builders ETF. There's a dividend of 0.78%. You're not owning for the dividend. 55% gain last year. Again, I fully expect that names like KB Homes, that's the DHI. This is DH Horton. DR Horton doing great. And this is a name that we've traded with Investment Club as well. A little high on the RSI. Maybe we get a gap fill here at 145.28. We'll use DR Horton as kind of our guide. Forward PE only 9 on this home builder. Yes, it's a little overbought here, or getting really close to it. But hey, you know, at the end of the day, we want to take advantage of the themes. We want to take advantage of the macro. And again, we're not going to expect a lot of people to sell their homes. But again, housing is still needed. We have an inventory problem in the United States. Builders need to build homes. We need people to fill those homes. And how do we do that? We lower interest rates to attract people to buy homes. As long as the labor market holds up, the caveat, excuse me. But DHI being a part of the XHB kind of gives us a little bit of room here. You could see there is a gap to fill here on 90.96 on XHB. That would probably be the level that I'm looking for as a possible marker to take a look at taking a bite there. But around 85, it looks really nice. because that would retest the resistance that we had before. You could see it 1 and 2. So again, we want to see if previous resistance becomes support, because this is just a breakout. Now again, doesn't mean you have to run out and buy it. Again, it's just about tracking performance. But again, I still expect that the home builders are going to be stronger this year because of the lowering interest rates. Target. Now again, controversy aside, Target has been beaten down, and that's fine. It is above the 50 weekly moving average, a really good sign. Where do I expect this name to go? At least to 180, but we also have a massive, massive earnings gap to fill. That's the real cookie there. That's what we want to get, 208.97. But if we're going to keep our targets rather conservative, no pun intended, 1, 2, 3 triple top and it falls, we created a base. We do have a earnings gap here as well at 112.83. So this one is going to be a little tricky. We're doing a little dumpster diving as well. So I expect 180 is kind of a TP1. 208.96 would be my full TP. Again, total take profit on this name. But again, in order to see if we can continue higher, you got to make sure that we can hold above 132 or so. You can see right around here, 131. If not, you have a gap to fill here at 112. The good news is that you're kind of setting up for a possible inverse head and shoulders. So again, you have your head and you have your shoulders here. So again, if we do tag 130, it isn't the end of the world. We'll just see if it can hold above the 200 MA on the daily. I would like to see if this 50-day crosses above it, because that'll be a golden cross, and then we can definitely see some more upside on target. I could see 180 by the end of 2024. Not tons of room. I'm not expecting a big growth name to pop here on target. We know what we're expecting. This is a consumer discretionary-ish kind of company, as we know. We're just looking for value. That's really it. So let's take a look at good old Target. Okay, looking at Target here at the chart, paying now at a 15 PE, not terrible. Pays a 3% yield while you're investing in it, not bad. EPS this year up 38%. Sales are down quarter over quarter, around 4.22%. Performance of the past year flat, even though the market was up. Not bad, not good at all, obviously. So what we want to see is a turnaround story. Now you could kind of throw this in with PayPal as well. I like Target a little more just for the fact that it's been beaten down with the controversy in terms of what they post in the stores and all that stuff. Again, controversy aside, I still looking at the technicals here. I think there is value to be bought here. It is on the cheaper side. Just hold your expectations to where they are. I think 180 is there. If we can get $20 more, $28 more, 208 fills that gap, and then we'll call it a target hit for Target, because that's all I'm looking for. And again, the real reason I say that is that I really don't want to invest in retail, just for the fact that it's very cyclical with consumers. All it takes is that downturn in labor, a tick up in inflation, and this name is going to fall. Again, consumer discretionary is difficult. That's probably why people are wondering, why don't I have Tesla this year? Tesla's discretionary. Amazon is discretionary too, but they have cloud, and at least they have a moat. Until Target opens up a cloud service that I don't know of or anything like that, then I think Target, I'm not even going to put in the same realm as an Amazon, meaning a long-term hold. I think Target's more of a trade than anything, a swing trade. But if you want to own it, cool. But I think Target is kind of temper expectations there. And we're finally, last but not least, is Bitcoin. Not a stock, I know. Bitcoin we've been talking about for a while. This also works in with the lower dollar. Yes, the ETF thing is a big deal. What I expect to happen is that we're going to probably get to around 48 to around 50,000. And once we do, we're going to reject, in my opinion. I think we get back to around 42, if not 40,000. If we can get that gap fill, again, this is on the weekly futures. So again, this is not spot. This is not Bitcoin spot. This is Bitcoin futures. I'm only going to go buy futures here because we can actually trade it. But looking at it here, around 40,000. I think if we can get back to 40K, that's a good level to buy. I think 50,000 is probably a number that a lot of people are probably going to sell. Maybe for those who bought around the 55,000 area back in 2021. You guys remember that? Maybe some people who got in right here on 65,000. Hey, they make back a little bit, they feel better, and they sell it. It happens. So again, what we're trying to figure out is what's the price that we're looking for moving forward. And again, I fully expect by the end of the year to be at least above 60K. I know that sounds like a whoa, big number, but again, all we're expecting is maintenance, meaning the dollar continuing to go down, interest rates to continue to go down, and inflation to continue to go down. And the ETF is really just kind of speeding up that process. Bitcoin has quietly last year was up triple digits and no one was talking about it. But now we're getting the Bitcoin proxies, the Maras, the Coinbases, the Riots, the micro strategies of the world that are benefiting from having Bitcoin. Bitcoin ain't dead. Let's be real. How many more bad things can happen to this and to Bitcoin, the actual cryptocurrency itself? It's been this way. It's always bad news and then good news and cycles, and that's just what it is. If this is a new bull cycle, which I fully believe it is, again, bull cycle meaning very similar to the mid 1980s, very similar to the late 90s, where we actually have a stock market that is not propped by cheap money a la 2009 up to the pandemic or past the pandemic. That's going to change. Again, Bitcoin will gain that risk on factor. That's where everyone's going to start taking a look at Bitcoin again. You just need to find a number where everyone gets excited again, and that's probably 50,000. I said back then once hit 40, that's when we started accelerating, or was it 35? I remember, and we pushed higher, so that's great. But again, what's the next one? 50K. That's when grandma and grandpa and mom and dad are asking you at the Thanksgiving table, what's up with Bitcoin? What's up with this crypto? That's just natural and normal for human behavior. When things go up, we get excited. When things go down, we don't like it. And that's just it. But I think 50,000 hits, pulls back, gets you back to 40 to 39. And that might be an opportunity for those to say, oh, see, I told you it's crap. It's going to fall again. And that's usually how it goes. But is this a trading strategy? I mean, at the end of the day, no, it isn't. Again, if you've been with GAR Capital, I mean, we've talked about Bitcoin since 2017. If you own Bitcoin back then, I think you're doing fine for across the board. The real point here I'm trying to make is the fact that Bitcoin look like it's just starting at this new bull run. The question is, can we get to 50, sustain above it? And if so, how much more can we go? And if we do get a pullback, how much of a pullback will it be? Can we hold 40,000 in that gap fill? How long can the dollar hold out? That's really it. And again, that's what I'm going to talk about in the next video. We're going to talk about our investment thesis. We're going to talk about what I expect in the stock market. 2023, we're going to recap it together. So again, I just wanted to give you guys the top 10 stocks of 2024, what I'm looking for and what I'm looking at. Let's make it a great 2024. Thank you guys again for watching. Appreciate you guys as always, and have a great rest of your evening. I will see you guys tomorrow for the next morning note. Cheers all.